Okay, so let's begin. Today, our topic of our webinar is Fintech opportunities in MENA. And we are glad to introduce our speaker, Mohamed Roushdy. So meet everyone, Mohamed. He is a experienced CIO with more than 22 years of demonstrated success directing business and technology operations. More than 12 years of experience as CIO in the fintech services industry. He built and the IT organizations and system of the largest Islamic bank in UAE, taking the bank from scratch to go live in 4 months. I think it's really unique and unprecedented achievement. He led the IT team of the first ever conversion of the conventional bank into Islamic Bank, National Bank of Sharjah to Sharjah Islamic Bank. He is speaker at major IT conferences and forums in the Gulf and Europe on a wide range of IT and business topics, starting from fintech, digital transformation, cloud computing, core banking implementations, and Islamic banking. Also, we are glad to announce that our invitation to join the discussion have accepted our strategic fintech partners. Meet Igor Grabovich. Igor, say hi, so everybody can see you.
Hello.
Yeah, he is expert with more than 10 years of experience in fintech projects, strategic business planning, building relationships with banks, and growing successful businesses. Also, we have on the call Yeremenko Yegor. Yegor, say hi.
Hi.
Yeah, so he's technical team lead with more than 15 years of experience in development, also of fintech projects. So guys, I'm glad to have you all here. And let's begin our discussion. So Mohamed, what are you going to tell us today? What kind of fintech opportunities in MENA?
Thank you, sir. I'm very much appreciated really this opportunity to talk with you guys, and very interesting and inspiring topic about the fintech opportunities and landscape in MENA here. As you know, our region is very dynamic. I would say like one of the most growing area here, like in the world, Middle East and GCC mainly, and North Africa. Lots of opportunities happening, and I think the digitalization and fintechs and startups are taking a big shape here in our region. I remember we have maybe more than 10 years back, we have around maybe 80 only companies, startups. It's become now more than 1,000 or 1,000 plus. So you can see that the rate of increase or development in the startup world and the fintechs and so on is really very high here. Are you able to hear me, Sian? Is okay? My voice is fine?
Yeah, everything's clear. Okay,
that's great. So, we have a few areas to talk about today. One of these, is what you can call the finance, which is like new model of finance. As you can know, everybody knows the fintechs, it is in mainly payment lending. This is the two really which have been taking a big shape between payment and lending. And then after that, followed by like robo-advisory investment, and blockchain has some, use cases. So you can see the lending and payment are really the one which is taking the whole, maybe 70 to 80% of our worldwide fintechs, development, maybe 60%, I would say, go into these two areas only, fintech, payments and financing. What we can see here, we have something I called new mode of financing. Maybe innovation really plays a good role here, where we have something called, in fintechs started up here in the region, which has been there worldwide for a while, called buy now, pay later. E-commerce and the pandemic makes people staying at home, and they do much more, shopping online, e-commerce. So the e-commerce comes with what? With payment. You need to pay, you're not going to the shop. Or you have the other mode of payment, we call it cash on delivery. You get the goods, you pay when it arrives you. Now people find, there is another even better way to tell the customer, you can buy it now, but you don't have to pay the whole money now. You can pay it over 3 to 4 months, even up to 1 year. We call it buy now, pay later. If you look at this one, this really what you can say is like, you are giving a finance to customer. We can call it like a microfinance, like it's I say around $100, maybe tickets is around $100, $100 to $200. This is how people deal in this kind of transaction, but the volume you can see it high. Why people go for buy now, pay later? Because it's convenient. When you go to, like, in such case, you don't need really to do any effort. All what you have to do during the checkout, you click, it tells you, okay, credit card, or they give you 2-3 companies, which is you do buy now, pay later. You choose one of these companies, you pay based on the company rules or whatever, you can pay 15, 20%, 25%, or you don't pay at all. And then you said, okay, here is my credit card, I'm going to pay over 4 months. You get the goods, you are happy with it. If you're not happy, you can even return it back, but you still can pay over 4 months, you're not paying anything extra. So now you are giving finance without interest. And this is really great because the small tickets, but the question here, how these people are making money? Because, they have to make money, it's nothing free in life, I would say. What the people, they are doing very smart, the merchants would like to sell. At the same time, the merchants, they have as well, a marketing budget. They have some other promotion budget and so on. And instead of putting this budget maybe in ads or whatever, and sometimes it brings not the right customer, they can put it with this kind of fintechs. They sell it over maybe 10% discount, let's say, or 5%, whatever the deal with the fintech company. The fintech company take it, they sell it to you. The merchant or the shop gets his money on the spot. He's happy, his deal is done. Still, if there is any return, he will take care of it as well. He delivers to your doorstep, and the company, which is a fintech, take care of the payment as well as the risk if the customer is not paying. The risk of default or non-sufficient, balance or whatever, if the card is bouncing back. So here you can see it's very nice, finance model. I don't give you money to buy, but I give you the product over 4 months, 5 months, without interest, without charges, without profit in Islamic banking, and then you are go. So everybody's win-win here. So this is what started becoming really a very good, what to say, like trend here. We have around 11 companies here working in this field. The biggest one is Tabby. They done, they done a great, really A series fund. 32 million last week. They got 32 million debt and equity, $1 million. So this is quite, a big, impressive, really. The company maybe as a year back when it started, or 2 years. And then the second company called Spotty, they done around $500,000. And I think they got even Australian, VC, went into the company last week. And then we can see other companies here in Egypt and other places, but also what we can see in this model, I think regulation will come after, because, this is an innovation always come first. And sometimes a regulator said, okay, guys, what's happening? Let us see what is the regulation, because you don't like people to go into debts, because it's very easy really to do, to buy things, many things, because now you feel it easier for you to pay over 4 or 5 months. You buy more, and maybe this can bring some kind of debts. And I think there is in UK and other places also, they start introducing some kind of regulation. So I believe this is one, I would say not the normal finance, because the normal finance, I give you money, I finance with money, you do whatever you want. But now it's over goods, and the important thing here is the seamless experience for you as a customer. You go, you pay, during the pay, you choose the number of months, it's done. You get the goods. So I think now here, you don't have to put any more paperwork and so on. So I think it's very innovative. So I would say this is one of the very interesting finance model for fintechs. So this is the first one, which I'd like to talk about it today. Second, we have, by the way, if anybody have a question during the discussion on the same thing, please just let us make it interactive, and then we can talk and discuss. That's very important. The second one, yes, the second one here is, if you look, guys, here and at fintechs, you can see fintechs mainly, as I said, payment and lending or financing, and then investment, robo advisory. There is some other platform. But if you look at these, all of it, most of it is 90% of this one are all consumer only. It's B2C. It's a fintech company targeting consumer, targeting me, you, and everybody else. But if you look around here, between the fintech companies and the banks or another company and a company, there is lots of work here. We call it B2B. So the B2C took, most of the hype, most of the interaction happening in fintechs are mainly B2C, not B2B. But B2B, if you look, the B2B even payment is huge compared to B2C. Because B2C, like imagine a company, SME company or a corporate big company, how much payment they are doing? Lots, big amount, really, number of trillion of dollars. If you look as the B2B payment worldwide, it's trillions of dollars. Too much, you know. So now this area has not been taking any, like, it was taking some kind of attraction, but a little bit, not much. And now we can see, you know, after the B2C, you know, area has been you know, maybe I would say busy and crowded with many innovation and so on, the interaction going now into B2B. What about these companies? What mainly the SMEs, the small and medium enterprises, have a big part of in economy. Some of the economies, if you can see, the 90% of their companies are, number of companies, I would say, is SMEs, not big corporate. Big corporate maybe numbers, you know, hundreds, 1,000, whatever, big corporate in any country. But if you look at the small shops, the coffee shop you take a coffee from, the grocery you are buying your grocery from, all this is SME. Most of them are SME, not the Carrefour type or the Giant type or whatever. All these are SMEs. So these SMEs, they deal with lots of payments, they deal with lots of accounting, they deal with payroll and all. So now the very interesting now that the shift is going, and the opportunity, I would say, lying in the B2B, because this is an area doesn't have much has been developed for them. So the B2B become a very important one. If you look at one of these, is, as I said, the payment, for example, for B2B, it needs lots of you know, work to be done. I think worldwide you have even Square, you have even PayPal. Worldwide they are working on this. I give you an example what's happening here in I think in Saudi, invoice discounting, for example. You sell something, you get an invoice from a corporate company, and this corporate company, you know, they're gonna pay you in 60 days or 7 or whatever, 30 days, but you are an SME, you need your money today. What you're gonna do? There's some kind of very good platform, fintech platform, where you can, you know, be, you know, you as a fintech will be there, or also as SME will be there, and even the corporate will be there, or the seller, the buyer and seller will be there in the same platform. If the, you know, seller and buyer accepted the terms, then the fintech or the company, you know, you will be paid the money, you know, upfront as of today. And then within 2 months, you know, maybe with 3% less, because now, you know, I'm gonna get, like, I give you money today with 3% less. It's called invoice discounting. And then with 3% less, and the other company, the buyer will give it to me over 2 months. And if everybody agrees, great. You get your money now. I make 3% out of this, so you get your money. You get a 3% profit or interest over a 3 months time. Now, if the other seller would like to say, okay, I don't have the cash, let us make it over 6 months, not 2 months. Then the fintech company, it's like a bank now, you know, you can see. So this is like an example of the invoice discounting is a B2B. If you look at this one for an IT company, for example, IT company is selling, you know, I would take it as a hardware, for example. You're selling routers, switches, and when many IT people are here. And then you sold it, but you need the money today. The same way, you can go in this platform, and the platform will pay you the money, or the fintech or whatever. Even you can do a crowdfunding here. Get crowd people to pay the money for this one, and then you're gonna get even, you know, profit within 2-3 months, and even the buyer will pay over 2-3 months. If you want to extend, you can do the same. So now this is an example of a B2B, and I believe there is some, even the sandbox of Saudi Arabia, for example, there's some companies doing it, and it's a very good thing, because, you know, we have a Sharia banking, Islamic banking plus conventional banking. This guy is doing it over Sharia as well. So people who would like to go for Islamic finance, Islamic banking, they can't find the same mood. So this is an example only. The second example as well for B2B is payrolls. You know, this is adjacent fintech, they call it, or another horizontal. But, you know, you as SME or a small company, you need to run your payroll. You know, do you need to hire your payroll people, or you can just use the platform to process your payroll? The other one is invoicing as well. You know, you have bill.com. It's a big thing in USA. Your accounting. Do you need to hire an accountant? No, you might not need. You can use a platform to do your accounting. This is all B2B. And recently, also very interesting, I have seen one of the payment companies. They came with a very, you know, like something which is common or started becoming, you know, new worldwide. Outside is like the payment. You turn your Android or your whatever phone into a point of sale. So you as a company don't want to go and buy terminals. You know, why you buy a POS? Maybe you can have the software there. Then this is another B2B. You know, like all these services for business to business is coming up, and I think this is really a big room for fintechs and for innovators, for entrepreneurs to go and tap into this one. So this is the second one. The third is, I would say, is you know, is the data. You know, data is, you know, like, you know, people say data is the next oil. Next oil means is the next wealth. You know, people, they have lots of oil. You know, oil is, you know, oil countries are wealthy countries, right? People, they have the right data, they can have it, really the next generation oil. Today's, I wouldn't say next generation, by the way. I say today's oil, it become moral data. You have the data, you can do, you know, miracles with this data. But where is the data has been used? You know, the data has been much used here now in some analytics, but lots of banks start using it now for credit scoring. Now a bank, you know, a customer coming to me or a company, and these people, what they wanted to do is they wanted to ask him for a loan or for finance. How can I, you know, how can I go and do what you can call credit scoring for these guys? The credit scoring here, you do it through data. So, you know, you get the data of the customer, you get external data, internal data. If the customer is dealing with you, you get something else from other banks, and you start looking at the customer behavior and whatever, and do, you know, the scoring, which is really great. And I think this is a very good use cases for data. I think what's happening more now is like to go more in what we call in the area of product, you know, positioning. You know, I will tell you one thing. I got many calls nowadays for people who want to sell a credit card. Like everybody's selling credit card. Why is the bank selling credit card? Because credit card is very, I would say it's very lucrative. It's very good business. Big, you know, if people defaulted in these bad days, they pay lots of, you know, interest and so on. So it's a big, you know, it's a very good business for the banks. But is it a good business for me as a consumer? Did you look at me and my case and see if this is okay? The credit card for Mohamed Roushdy is okay, or something, maybe home finance, maybe he wants to buy a car. So now we need to go, or the people, you know, some of the innovators also, fintechs would go more also in product positioning, or we would call it lead scoring as well. You know, leads, I call a bank for, or I went in the website, I do some research, you know, about, you know, a home or a house. Many times you get all of the, you know, this portal coming after you. Every time you go on Facebook, you can see the ad about house, because you know that you're looking to buy a house. Now the banks should be in the same. You need to buy a house, then it means you need to, you know, finance the house most likely. So we need to move from only, you know, use cases for, you know, credit scoring and customer scoring to more customer positioning. You know, from only the risk, because I think the bankers, they use it for risk, to, you know, product positioning, lead scoring, and so on. So the data really has, you know, enormous areas to be used for in fintechs, and not only in fintechs, in each and every customer behavior. You know, because lots of our time now, we are in social media, we are in platform, we are in LinkedIn, we are in Facebook, we are in Twitter, we are in Instagram. So people, they're big, you know, a big time you are spending there, and this behavior really can even tell, can you what you need to buy, what you need to do. So the customer behavior, even this can help. So the data, if you look at the data, there is many use cases can happen here. So this is the third one and the most important one. The fourth one I would like to even, you know, to mention here is what you call the open banking. You know, in Europe you have the open banking, you have you know, PSD2. This has been there and become a mandate in Europe to have, you know, open banking standards. So the open banking is there. It's still here. We don't have a standard in every country. Bahrain, it's very great. The Bahrain started, and they give, I think, 6 months for banks to comply with open banking standards. So that's meaning opening the doors for fintech and innovator to integrate with banks. Because as soon as you have the data of banks, then you can really build lots of, or you have the authority, you are authorized by your customer to access his data in any bank. It means that you have, endless of, use cases you can build for the customer. So now this is already happening in one country, and Arab Monetary Fund, the AMF, which is, I think they have more than 16 around, in a number of central banks here in Arab countries are part of AMF. And I think they came with a great open banking standards or platform or guidelines with, I think they started with MasterCard, with Fintech Association, MENA Fintech Association, and other, player also in the region here. from all the countries. They came with a very interesting, standards for open banking for all Arab worlds, which is like it's in MENA. All of them are MENA. MENA is most of it Arabic countries, North Africa. So all of these, they came with a very good, standards, for the open banking. Now here, it's very important that the innovator fintechs take this one standard and start building, the next generation, interaction between fintechs and banks. Now we have two companies, I think Dabi and we have Tarabut. These two companies I came across. They do very interesting. You can even, look in with these two companies. They have a relationship with in a number of banks, and this is a good thing between banks and fintechs. And this is what these guys they are doing. You can log into through this platform to your bank A and your bank B and your bank C, and then they can consolidate all your position as a customer into what you can call a dashboard. So because people here they go with different banks. If you want to transfer money between maybe one of these two banks, still they allow you. So I think this is one of the use cases I personally use. So I'm trying to say this is the one there. And I think this is growing. So open banking, since you have open banking, it means that you're going to link all these banks together in one country. And then even in across different countries, it means you as a customer can really have a dashboard maybe, or you have a control of your accounting and your banking over maybe different countries as well, not in one country. So I think, this is one of the fourth part, which is I would like to talk about today is the open banking platform. This is the four areas. Of course, the other areas which we're having from before, payment is even lots of interesting payment happening. But this four, I would say, is an important one, is more opportunities coming in these areas, and fintechs and companies or innovators, VCs and all should be looking at.
Okay, thank you very much for this, widest topics you want to cover. Okay, and if anybody has any questions, so feel free to write into chat or ask, raise hand and ask questions. So from my point of view about, for example, open banking, what kind of risks are there? Because open banking thing is that you have, all banks have to provide the data of the customers to the companies that will build services on this. So taking into account the difference between the regions, the MENA region, for example, and European or American regions. So it's like different regulators, different kind of regulations, and different perception of the people of their privacy. So what are the differences in this way? Maybe you can mention, and how it will.
Yes. Thank you for this question. It's very important, very good to ask. Actually, the security is still, it's everybody's concern today, especially when you might not find, like people also, the culture is different. People are used to go to the bank, people are used to the bank is well secure and so on. So I believe the security become a very important part. And that's why most of this open banking, most of the, the collaboration happening between banks and fintech play a good role here. Why? Fintechs and companies, they are very good in user experience, coming with innovative products and innovative ideas. But when it comes to the security and this, heavy kind of regulation and so on, banks have a very good, really arm here, or muscles here, I would say. They have big security teams. They are very well connected. They have even the funds to secure their system. So having this collaboration between fintechs and banks, they can I would say complement each other. So you have the banks and you have the fintechs. So everybody from a security point of view, the protocol should be there in place. And it should be from a community point of view as well. As I said, you're like AMF when they are doing some kind of open banking, and they take care of the security here and other places of the world, and they get all the feedback from different CISO and different security teams. It's very important. So the security becomes here not only one entity, not only fintechs only should secure, not only banks should secure. It's also the big companies, which is they are part of this journey. They have to secure as well, or to give their input here. You can bring on the same platform as well big security companies, big which is well-known ones. You can become part of this groups, or so all of this should ensure that the security is number one. Nobody could leave it like not tight. It should be very tight, but it should be as well at the same time convenient. So there is an issue here between being very well secured and having some kind of convenience. Because if you want to go 100% sometimes, then you have to block everything. Like you have to really think. I used to say something as well. There's some kind of thing, risk-based security. How much is the risk on the data? Which some data they not have a very high risk. Some are having a very high risk. And then you have to make sure that you're alerting the customer if his data has been used by somebody. At the same, the bank has to be, like making sure that any data has been given to any fintechs or the customer is in the loop. So I think it is something which is like everybody should be part of it. And putting all the what we can call security tools, yes, it's fine, and systems, hardware, software, whatever. But people awareness about security, what's happening, and being transparent is very important. So if even hacking happened, you shouldn't even tell people that this has happened. It happens. Even the biggest banks and even countries nowadays, they got hacked. Because it is something. It's like a fight between the good and bad, I would say. So you have to be. It's evolving. And we have to make sure that the security is being tackled and being transparent with all the customer and is the company and so on. And I believe most of these platforms are really built on a good security, maybe layers. So I would say this is, like something we are all aware about, and it's evolving as well. It does take time to be developed. The other thing now is the culture issue. The risk here is the culture. I use to deal with a bank, okay? I am happy because this bank is a big bank. The name of the bank. Even people say, okay, I would like to deal with this bank because it's backed by the government. It's backed by this big investor. We will have this culture point. So now the issue which we'll be facing here, and people still, if they see convenience in a fintech companies, they can use it. Why not? And especially if these fintech companies are dealing with a big bank, and the big bank came and said, okay, we certify these guys, they're working with us. They have the minimum ways of security and so on. Then they are dealing with that. That's why I'm saying that when you come to what you call collaboration, it's a big win-win here. But when it was only a zero-sum game before, either fintech will take over or banks will take over fintech. I think the issue here, there was a problem between both. But since we are moving into what we call collaboration mode, and I think this is helping each and everybody. I hope I answered.
Yeah, thank you very much. Igor, if you have any questions, you're feel free to ask.
Look, now we have discussion about open banks, in European Union, and we have in 2018 Payment Service Direction 2. It's like PSD second, and this is good in one part, but it's bad in another part. Something like in European Union we have different countries, we have different regulators. We have one regulator, but each country have his own rules that we need to understand, and we need to check or to take something from one country and put to another country, and we have bad situation. Why it's bad? All banks with this PSD second is open. They open their API, but in one stage they open, another stage working with the regulator, the regulator close this door. Why? Because we need, first one, it's security, and we need some rules how we need to work with merchant accounts. It's something like B2C, B2B, B2C to B2B, and we have a problem. This problem is something like we all knew what we want, but we not connect each other in one time. If we collect all regulators and all big companies, small companies in one meeting room and discuss all our problems, it's very good. We solve all it. We have the same PSD second in China. China is one the most powerful transaction area in the world. More than 7 billion active users that they have now. Yeah, they have two big institutions. Yeah, Union Pay. Yeah, with China Bank. What is difference? Yeah, between European Union, PSD2, and China? Is something like China is one direction. All company go in one direction. All rules. It's a one rule. Not different countries different. It's one rule. And they have Union Pay. They have WeChat Pay. They have a second evaluation of payments. They don't need it take a card. They don't need it have different accounts in different system. One account, one smartphone. That's all they needed to buy something, sell something. It's a perfect. This is the way that we need take and bring to European Union this region, and also Mohamed understands that the same way it's for MENA region. It's the best way. But first of all, we need to collect all people who must understand what is the difference, what is the rules. Take one rule, take one base, and build this big payment transaction fintech strategy for all the world. It's the way that we need.
I think it's very valid, a comment. Thanks a lot. I think you are right. This is between when you have one country or one big area, I would say, take one direction and get everybody around it and move, while you are going another place, which is everybody, you said, okay, this is the direction, but everyone still has the freedom or, the change, he can change his own. And in such a case, yes, it does take you more time and more effort because you still have to work again on the, getting everybody to agree what you're trying to do. And I agree. I mean, this is like, of course, China, why it's definitely right. They are leading very much in fintechs. They said no for crypto. Now they are doing their own central bank digital currency. So I think, yes, I agree. They are doing, a very good here because they are, I would say, one country or one big, it's just a continent moving by itself, which is true. But I think now, this is bring to the European Union or the MENA here. I think maybe the IMF effort here happening, but I hope that we have any of our colleagues in the IMF here. I think they are trying maybe to bring this to all central banks and making sure that all they are buying one maybe guidelines and then bring everybody on the same. So I think your point is definitely right. And I think this is how people can win fast if they are aligned faster and they are able to move in one direction. That's definitely is right. I think there's some question came. I think somebody's asking something. I'm not sure if.
Yeah, the question from the audience is about cryptocurrency and their impact on financial payments, fintech payments.
Yes.
So there was a lot of hype, and it's kind of interesting.
Yeah. No, see, I agree. Cryptocurrency. See, I would say. See the point now, which cryptocurrency, like the point cryptocurrency, as soon as you say, people think about Bitcoin only. I mean, Bitcoin, of course, is the biggest, and we cannot talk about that. It's very big from a permissionless, and this is, I think, the most successful cryptocurrency which is today. But now I think, like I used to tell people the same long time back, I will just take you to something different. Before, when we started the cloud computing, 2007 and 8, I used to speak in a conference about cloud computing. And everyone said, why cloud computing, guys? Why are you going to take, my data? I don't know what is my data. So people were not imagining the same. And I remember in my MBA, I was studying, about Mac, about this McDonald's. When they came to Arab world, they said Mac Arabia. When they went to China, there is another Mac in China. There's another Mac somewhere else. So you localize your product based on the region you are in. Sometimes, maybe Bitcoin, yes, for everybody, I agree. But now, if you come to what you call enterprises, big companies, big banks, and so on, then the variation has to be there. That's why a permission, blockchain is acceptable, and we will look very interesting use cases happening today. I think the CBDC is a very good, entry into this. Central bank digital currencies. Now we are having a CBDC between Saudi and UAE, and this is a great thing. And it was announced recently. While both of the countries, they came with a currency between the two countries, And now where it will help, like the question about payment, it will help banks to do payment peer-to-peer. So when I'm doing peer-to-peer between me and a bank here and a bank in Saudi Arabia, for example, then I don't need to use the normal networks. Maybe I don't need to use Swift. I don't need to use whatever. I'm going to have a direct B2B, a direct peer-to-peer transfer between us. And this is a great thing. And I believe, my understanding, there's another project happening with AMF, I believe, and there was like another payment, Bona, what they call it. I believe this Bona also, they are talking about something similar. Maybe, I'm not sure it's blockchain or not, but they are trying to do something similar. So around, the member banks. So the crypto or the blockchain, I would say, is really affecting the payment in a very good way, but not the Bitcoin side, but it will be something else, which is a permission, network among the member banks, among consortium, like we have even a consortium also for R2, we have whatever, all of these. So all of this consortium type, permission type, I think is successful. It has a very good, use cases on the enterprise side. If you talk to the permissionless one, blockchain like Bitcoin and other, I think this is good for, the consumer. People are using it still today. It's going very much up. It's a different game, But I believe for banks, payment, enterprises, corporates, I believe the digital currency between banks, CBDC, it's a good start. And from here, the central banks and regions can come with their own digital currency, and then make people using it as a permission again, not a permissionless one. And I think this is we are moving ahead here.
Houses two worlds. Yeah. Okay.
Sorry, I think that when one of the countries starts working with blockchain technology and cryptocurrency, the first one starts working, like take their own currency into cryptocurrency, is the start of all world changes in this something like technology. Yeah, because must be the first one. Yeah, the first one, the first step, the first country, the first currency in some area, in some country, in legal, and that will be the start.
Yeah. I think first mover, and you agree, you are right. That's why. But now you can see that the for central banks to allow this, they are themselves experiencing the central bank digital CBDC, even in the call Abir. I think I have it. You guys can follow me in Fintech Bazaar. This is my page, other page in LinkedIn, and there is what's called Abir. Abir is the digital currency between Saudi and UAE, and even in the paper, which is 2 weeks back, it was a few weeks back, it was there when they launched published these papers after 1.5 years or 2 years before. They said, the next step, they are trying to see if they can offer the digital currency to consumer. Here, where you will not deal with central bank, except you will deal with the bank, and the bank will give you, so you can use it maybe for payments or transfer. So now even, they take it one step, which is great, really. So they can experiment themselves as a central bank, how this can work. And then once they are comfortable with it, they can see the next step, how can we take this to consumer? And think this is the way going, And then as soon as you have this kind of digitization or tokenization here, then I believe, like as you are saying, one country did it in a right way. So the example is there, is being tested. Then, you can find it other places. So I would say it's happening, but not the same form. Maybe Bitcoin is a different form, which is on a country-wide, and from a country-wide to be in a regional-wide and so on. And this is the future, and this is what's happening today. So I agree 100%. And this is, I think, what we are aiming for, to have this kind of. Now we have something else to talk about, is tokenization. Now it's very interesting that we, even here, I think in UAE, we have a tokenization, maybe policies or processes or guidelines or whatever, from SCA and from DIFC, from EDGM. They have been working on tokenization, real estate assets tokenization, any tokenization you can do. And tokenization will be based on what? Based on digital or crypto. And this one, they are talking about also the digital, digital custodian. So all of this, are being worked on, and we see to move the whole system from, it's a big shift actually. So this big shift with enterprises, with big companies, with corporates, with countries, it does take time. You cannot just do it as fast as you're doing in a consumer base and so on. So I think this is happening. And as I was telling to other people and some of different panels, I would say maybe 3 years from now, we can see something very robust happening around us in the digital currencies on a country level, I would say.
Yeah, and one more question from the audience about like fraud and money laundering in the cryptocurrencies. Can it be like changed somehow? Because I guess it's like one of the main blockers for these things to be massively adopted.
See,
so how Fintech can help in this?
It's true, I think maybe I can answer this one. It is, money laundering. It's like it's a big part of of any country when it comes to payment. That's why it is I would say like fintechs. If fintechs are regulated by central bank or authority, the money laundering part become a very obvious. That's why you don't find fintechs working for a long time without regulation. Maybe they do test their system in a sandbox for a while, and as soon as they are regulated, then the money laundering part and all the risk and part are being there. And I think that's very, very important part. I don't think that that's why when people come up Bitcoin and others, which is permissionless, and then they be worried about the money laundering part. But if you come to what we are calling this kind of regulation on fintechs, then I think there is a good regulation in place or measures in place for the money laundering. But let us talk about something else.
You also must understand, if somebody finds some regulation to stop the money laundering, and other guys find some scheme to reopen in other way, in other scheme, this is that we need to live with. Yeah, money laundering, it will be in a year. It's not stop any fintech company, any technology, because the same company who developed something against money laundering or fraud, the same company can bring some new ideas how to change the way and take these schemes in a new way.
Yeah. See, the point here is like, as you said, when you have a right regulation or right, setup in place, which you can take care of the risks around, then I think there is ways to know, what's going on. That's why, people try to be also more realistic in when they are going for a regulation or something like that, and making sure, as money laundering happening now more in cash more than digital. People use cash more to do money laundering. You go and you deposit, you go buy something, whatever. So I think when you are digitally, all your money are digitized and tokenized or whatever, then you have a very good, honestly, you have a very good way to discover what's going on, more than the normal way. Normal ways, you have like the cash. People use cash for money laundering. You don't use a bank account. They try even to use cash and go to bank. You do more other stuff for this kind of money laundering. But if you are digitizing everything on a system, I think you have a better chances really to get to know about money laundering. I think we have some last questions here before we close. I mean, I don't know how many. You can choose which one we take.
I have one question.
Yes.
Yeah, it's like a global question. Okay, so what do you think about the future of traditional banking and digital banking? Which way will win this battle? So
yes, thank you for asking. I would say, as I said, I was hinting this in the beginning. I think there will no battle anymore. It will be a win-win at the end of the day. It will be a collaboration mode more than zero-sum game. Zero-sum game means someone will win. The more I win, the more you lose. I think now it's going to be the more I win, the more you win. It's a collaborative mode more than really zero-sum game. I could see it now. I will give you a quick example here. Two companies I know here in UAE, they're doing for blue collar, salary, whatever. They're doing some very interesting stuff for blue collars. Today, these guys, after a few years now, they announced the collaboration with one of the few big banks here to work on their behalf. Why? Because they are doing it better than the bank is doing. The bank has the database, the bank has the customer, while the fintech companies, they have the UX, they have the innovative idea to use, and then both they came together and said, okay, why we don't work together? Either the bank can invest money and get his own people and do all of the stuff by himself, or buy the company, become a banking department, or the bank can go and say, okay, guys, let us work together. And I believe this is the mood now. It's not a zero-sum game. It's much more a collaborative efforts, collaborative mood. And this is what the winning one, I will tell you, the one which collaborate more for the success for both. And this is my point of view. Like there is a nice slogan say, if you want to walk fast, walk alone. If you want to walk far, walk together. And I believe this should be the way.
Okay,
yes,
thank you.
Very nice, very interesting. Yeah, and you have started like today's talk from this like microfinance, new kind of models that allows to move money faster, to turn around of the products make faster. So what stage is it now, like this ecosystem? Because to build it, I think it's not like small one player, it should be like a huge number of players working collaboratively. I mean, like for those who give the finance, or it should be like government support, because to build it is like a very great idea of this collaboration happening. So what stage is it, and how much time it will take to evolve? What like possible risks are there? Can you tell a little bit more about this?
See, like as I said, like maybe the first thing we started talking about was today, buy now, pay later, something new. It started evolving within 1 or 2 years. People start, because if there's a reception coming from customer for consumer, at the same time the government is allowing, and there is a win-win, I would say here, then things get evolved fast. What's happening now, I can tell you, you cannot really operate all of this without regulation. And people used to say at the beginning, I remember when we started the fintech 5 years back, I think it was 6 years back, I was in a panel in one of the big conference. And one of my colleagues said, okay, no, this is innovation are self-regulated, and I was not really in favor of this. My point of view, I come from banking. So also from banking to fintech, I said, it should be some way to regulate for the sake of everybody, for the will of everyone, for the community, for the companies, for people, and so on. So what's happening now, we could see regulators start, interacting very well a few years back to all the innovation. And now we can see in every central bank or in every place, we have each 3 or 4 here regulatory bodies talk about fintechs, about sandbox, about RegTech. All of these are happening, and lots of investment going on here. Other countries the same. Now what I can see, which is I think is very important here, one country can do everything good, but the other country, the neighborhood, maybe they are not. The collaboration should come here across the geographic itself. Why? I done a fintech company here in UAE, but Saudi is another bigger market. When I go to Saudi, we start from scratch again, and this is happening till date. But if this kind of regulators start talking to each other, like the CBDC happening, or the AABR with Saudi and UAE, if this regulators start talking to each other in a geographical or regional places, then this will ease, the fintechs and innovation to grow. Because instead of having a market with 9 million, I will have a market in this region with 50, 60 million people. And if I go to North Africa, I will be having 250 million people, and so on. So this is the way really we can develop the fintech and ecosystem, I would say innovation ecosystem for startups among, regionally. And from regionally, even we can move later on to other parts of the world, to Europe and other places. I think maybe this should be happening in Europe because we talk about BSD2 or open banking is across Europe. I know there is some differences, but if you are bringing collaboration among regional players, this is a big thing. I can see also some collaboration happening between some of the fintech centers here and Singapore fintech, because Singapore is very advanced in fintech. If you're bringing all this, then I think we are in a good shape for pushing the innovation, reducing the risks, and able to learn from each other. I'm sorry, because I just need to take some.
Okay. Good, I see. And so you have mentioned about risks. So if you're, for example, like new fintech startup or company wanting to participate in this ecosystem, so what kind of risk you should expect to face and how to overcome them?
Yeah, see, you know, a startup by itself had its own risks, you know, from the founders, from the idea, from whatever, many things. The only thing I would like to tell here, like you could see that there is very great ideas or the great modes of startups, which might be great in Europe or Ukraine or in your place, but you cannot bring it here and you think it will be the same. So it is very important that if you want to start a startup or something, you need to know your product demand. You need to test the market very well. It doesn't mean that if it worked somewhere else, you're going to bring the same and do copy and do something a little better that works here. You have to make sure that your idea and products are fitting the culture and people and where you're going to go. So I think this is a very, very important thing in general, globally, you have to do. Because now I think we have very good ideas happening, you know, everywhere you find it. But it doesn't mean that in each location or each part of the world, this is the same idea will be really successful. So you have to make sure it's localized. You have to do your market research, and you have to make sure that your market is appealing. Second, the success does not come free. It does come, I believe, with lots of pain and time. These colleagues, which is set up some of the companies for 4 or 5 years, I didn't hear about them. I was thinking that these guys, halas, you know, something is happening. Then later on, I could see some announcement. They become collaborating with big banks. Why? Because he has been there. He has been patient. You know, like they have been working behind it. You know, like till it makes. If you believe in something, I think it's very important to believe as well in what you are trying to do and trying to implement. You have the passion for it.
Okay, I see. And we also have one question from the chat. How we connect fintech industry with AI from your perspective?
Fintech industry with AI. Yeah, okay. Thank you, Mohammed, for this. Very interesting, you know, as I said, you know, like now the data, when I say data, it means data and insights analytics. And I believe now the big really big winning which we are getting is around analytics and AI. So when you go in AI now, I think, as I said, some of the data companies or data fintechs, they are all using AI. So everything is AI today around machine learning. So the data, everybody having data and working on it, he will be using AI, using machine learning. You can see even for I would say identity management. So today is very important. One of the things I was speaking with one of the banks recently, we're talking about, you know, digital transformation. The very most important thing here is to identify you as a customer online. You know, I don't like to go to the bank. I don't go to kiosk to register my fingerprints. I need you to know me from now from home. I can open an account. I can do transact. I can even do finance. Now it comes to the identity. What is the identity? You have an ID from where you live. You have a passport, and then based on that, you might be able to do online viewing, photo, and video. You look at your face, your voice, and then they said, okay, this is Mohamed Roushdy 99%. For example, this is all AI. And then when you bring to the other level of AI, you come to the data in banks. You know, there's lots of AI really, which is tools we need to use to get insights. The insights means for products, for risks, and for so on. For fraud management is very important, for credit card and online fraud, and so all this is using AI. And I believe people will start using. But the only thing here, the only tick here is one thing. When you do a model of AI and machine learning, it does really take time. Someone was asking me, you know, what this department is doing there in the company or the bank. They take a long time. We didn't see much of, results. Yes, because this is not like I'm not doing a dashboard. I'm getting some data, putting in a nice chart for you. No, you are doing a model. You are training the model. You are trying to test which model is right, and then till you come to a result. So this does really take time. It's a journey. People should learn that this can bring a big value, but maybe after a while. But the value it brings will be very, very big for any company or a bank.
Yes, and to build also these models, you really need to have like correct data, and you have to collect it somehow.
That's true. Current data, you have to go the data as well. You know, make sure that it's sanitize your data or whatever, cleansing your data. It's too many things what you see, and then till you train the model, till you get the insights, it really takes time. It's not a project, as I told my other guys. It's not an operational project. It's okay, gonna get tomorrow results. No. You have to be patient. You know, like if you wanna write this one and get a good result, yeah, it does take time.
Hello. Do you hear me?
Yeah.
Yes, we can hear you.
Hello, everyone. Hi, Mohamed. Thank you for your excellent speech, and it was very interesting. So my question is the next. What is the situation in the MENA with the KYC, and how the banks and the regulator, how they are strict to the payments and to the transactions in the e-commerce?
Thank you. You know, the KYC now, thank you for asking, because this is a very good initiative happening here anyway, for example, among a few banks, and I believe they're using blockchain as well. And then with also one of the, you know, government entities here in Dubai, and they are using blockchain for KYC, you know, and this is already went in production, they're live. So there is more to come. So this is one of the good thing about collaboration. What they are doing, they are using a very interesting fintech companies doing, you know, customer onboarding and KYC. So the fintech company, they came with an idea. They went to a few banks, they went to the government, and they came together and they put it into production. I think you know, this year they went into production, and this is already happening. So this is a great thing, you know. I would like, it's good that you asked. So now here is the collaboration come between the fintech, and so I think this is happening already, and using blockchain, which is making also, we talk about the security, by the way, in the beginning, and people are, you know, want to be secure. I understand that the big, you know, advantage of having a blockchain is the security. You know, you cannot change anything in the chain. You know, the security matters here is very, very high in blockchain. That's why here they're using blockchain for the KYC and customer onboarding, and this is already live. Now for payment and e-commerce, I think we start using more wallets to ease and make a seamless payment. And most of these wallets are using credit card, and this credit card vendors are there, you know, are supporting it very much. We don't have many wallets here in our country compared to others, but I saw some few wallets coming even in country-wise. I think something between the few banks, most of the banks here, they came and they created a wallet for payment for many of the you know, transactions the customer is doing. We are about to see even super apps happening here, which are bringing many services in one, where you don't have to jump between one to the other. So this one, I think the good thing about it is as well the regulators are supporting it. So it's not only something done from innovators only. It's between it's bringing the regulators, the banks, even the government and the fintech companies to bring. I would say they are building an ecosystem, you know, and this is very important. You know, you can see most of the successful ideas and fintechs and all, when you really build an ecosystem around. It's not really a one person or one company or one bank initiative. You start with one initiative and bring the ecosystem, build the ecosystem, then you have more success. Sorry. I hope I answered your question. Yeah.
If possible, something like we have some online store. Yeah, we have a lot of banks working with e-wallets, without e-wallets. Without e-wallets is something like we implement e-wallet to something like a cabinet of some e-commerce project. Yeah, you go to this store. Yeah, you sign in your cabinet. Yeah, and you already have your e-wallet. Yeah, because it's something like all cabinets. It's something like e-wallet, but different banks connect to this e-commerce store, and this cabinet, this e-wallet, it's something like they have opportunity to take some microfinance. They can also take put some money, and operate like a bank account or connect to their bank account directly without any other third parties. It's possible in MENA.
Yeah, you can. Even I will tell you one thing here happening. I think we have here is some e-wallets to go. We have some kind of a network banks. They have a payment network among the bank. I think every GPS some. So now, if you have the wallet is here in UAE. when you have the wallet, you can say, okay, transfer money from your account to the wallet. It's like you want to fill in the wallet with money from your bank account. And then you restrict the use of the wallet for this amount of money. You want to buy something or whatever. And then what you do here, this is wallet has been connected to different banks. It can connect to this bank through online, because there is this around 8 to 12 banks are part of the network. It can go connect you to another bank through wire transfer. It can do another one. So the beauty here, yes, you can have different way of payment based on the banks which you're using with, or the customer. Like maybe I'm one of the banks which does not have a relationship with this wallet, but they can do a wire transfer, for example. So you can build different payment mechanism for the customer based on the customer bank, and you can bring funds. So I think there is ways here. And let me tell you, this is very interesting as well. If you bring a fintech here in the middle, and this fintech become a layer for this wallet, for example, and then you will not see that you said, okay, which bank you are in, and they tied up with all the banks, and they can have only one way of payment. You don't know what is the payment happening. It can be a wire transfer, it can be online or whatever. So even this is some of the fintech for B2B worldwide, which is you can mask the way of interaction, and you have only one way, which is you do online, and then they take care of the relationship with all banks. You can do even this. People do it even for money transfer, overseas money transfer. You build your own with the customer. It's become B2B, and your relation as a fintech or a backbone can be different. But this wallet, as I said, they build a different way of payment based on the customer himself. You can even mask it, as I said. You can have your own fintech B2B in such case.
It's cool because some company who has some wallets, some technology is just implemented in e-commerce, and that's all. If possible with regulator, it's a two markets. You have our first market for IT technology who develop this e-wallets. Another it's good for e-commerce, and also it's good for the banks, because banks pay to MasterCard, Visa, American Express, and other. With this wallet, it's something like without this global payment solution.
That is true, and even people try to go away from Master and Visa because of the tariffs and so on. That's why even we have this become between some of the banks. They have this kind of it's a sort of direct debit, but online direct debit. Immediately you can get the cash, put it in a wallet, so I think this is all good, great thing for B2B, for businesses. You can have, to make life easy for customers. Like for a transfer or a payment, you don't have to go in the hassle to go into the bank account, put beneficiary and so on. I think that's why still even in the payment, although the payment is very crowded, there's too many solutions in the payment, we have a room for payments as well. I think we have something very interesting in payment here, peer-to-peer. People, I can transfer to you or to someone in UAE, for example, using some of the apps. I can transfer some cash, 100 dirham, 200 dirham, whatever, to their wallet. So now I have a different bank account. He has a different bank account. You go through the same fintech company or the same app or portal or the platform, get enrolled, and then they access your bank account through the open banking I talk about. They are using one of these open banking companies to log into your bank account and do the transfer and so on. So this area really, it makes people's life easy, and that's why the fintechs are, having still big areas or big improvement or opportunities in even the old style or the one which has many, like the payment, for example.
Yeah, and also I know that in MENA transaction is high, costly. Yeah, in Europe we have something around. We start in 0.8 and have 1.5. It's a maximum. Yeah, for high risk. In your region, I know that you have 2%, 2.5%, 3%, and high risk it's 4, maybe.
It's true. It's true. That's why the ways people looking at ways different payment. Even we talk about buy now, pay later, because people do not use card. They use it only to pay only. They don't take any credit. So people try also to minimize the percentage or whatever they are paying for merchant or I mean the businesses themselves. They are trying to minimize the percentage they are paying to the card operators. So they find other ways. Maybe they can go to the customer account. They can debit. I would say still the payment. It's a great area as well. and people try to find even innovative way of payment. And this is what you can see some of the fintechs are playing a good role here.
Okay, maybe one question for me.
Yes.
I know in the region it's a lot of expats, and they bring to the region their own cards, something like United Kingdom, United States, or other country, and interchange, and it's cost for this people to pay. It's some program, maybe a government program, to give these expats some local cards with very simple procedures, because now it's very difficult to go to you must go to the bank, you put all your documentation, you open an account, after that you take a card, but the card is debit. After this debit card you take a credit card, after this is some limits, and it's very difficult. If it's possible to change the scoring to be faster for expats, because expats, it's a good part of your markets. They buy a lot because they knew how it works in United States, in Europe, in China, and they want the same services in your region.
See, you know, like still the regulation around this one is like it's not as easy as you said. Like I think you will need a 3 months bank account. You know, you have to make sure that, and then you have to have, you know, a credit history in the country for how many years you are working, as well. You know, your company should be listed. It's not easy, definitely, that they give credit cards here to customers, though they are the most, selling product, or I would say, offer the product for banks nowadays is credit card, because you get good money from it in return. But still, the bank, from a credit point of view, they get worried because people can use the card, they can leave the country, because the point expats, as you said, is right, is good and bad at the same time, because people can do a big transaction and leave the country, and then there's lots of debts will be behind it. So now the only thing for them now, they try to offer it, but you should be living in the country for a while, or at least big company or a company listed with the bank. So still this will take some time. The only thing, people still here can use their card from UK or from anywhere else if the card is still valid. I don't even know people who are living here, they live in somewhere else, and they still using their cards outside. But yes, I agree, this will take some time because this has some kind of credit. Now, they come with what we're talking about. You have a prepaid card, a virtual prepaid card. You can put this amount of money in the card and start using it. So it facilitates the e-commerce transaction and so on. If you want, to make sure that you can top up your card by any means, from a bank account, from another card. I think this is the only thing happening now, but it will take time because of the credit issues. Being an expat, it has its own pluses and minuses. 90%, 86% of people here, for example, 84% are expats, are based on the statistics. But you need really to have this kind of credit history. But there is other ways, as I said, to use it, like to buy prepaid through prepaid card. I think this is the best way to do. We have, I think, something about maybe we can take the last. It is one thing.
Yeah, we might take the last from the chat. Like, what are the top 3 challenges Fintech are facing?
Yes, thank you. Like the point here, I will tell you from my point of view. We started fintech companies was like, it's very good to have a fintech company. It's since it become a trend. Lots of people jump into fintech. Most people jump to have a company in fintechs because we could hear about how fintechs is changing the world and so on, and then people get very good outcome from the company to exit. But now the problem here is that many of these does not really doesn't really grow. Because, as I said, you have to make sure the idea, the demand is there. People are sorting, there should be a problem statement. People should be sorting out a real problem, which people want to have, so, to solve, sorry. So this is very important. So people should make sure that they are having a good product which is can fit and can really get people's life easy and life is better. I would give you an example here. Now we have some of the what you can call the crowdfunding companies, which is you do SME lending. It's very good, I would say for SMEs, it's a very good. But how many companies? Maybe you have one or two. Why we have only one and two? Because the appetite here, you have more people want to SMEs want funds, want to be financed, but you have less people wants to give the money because they are afraid. They are not. They are afraid to give the money. It's a new model and so on. So you have a good demand, but the source of funding, they are not really big. So these companies, they start turning into banks to put money to invest. So if you look at the idea, maybe worldwide, you have very good credit companies or crowdfunding companies. They are very successful elsewhere, but we don't have the model as successful as outside, worldwide. So or in the Western world. So that's why I was discussing. I'm saying not every idea it's successful somewhere else, it will be successful here. The company are doing well, they are okay, they are fine. But if you look at the company, how much growth they have done over 5-6 years, it wouldn't be really as what people expected would happen. So it's very important that products really can fit in the culture and everywhere here around you. The other thing here, people should work with regulation and they could have their model open to different ideas. I will give you also, let me give you a practical example here. One of the real estate finance models here, they are very good in raising fund, and then I think it's a real estate investment. Now they start selling their module to real estate companies. Why? As a white label. So people is okay. Yeah, I can crowdfund. You can put some money. They buy the apartment. They rent it out. You get a demand. You get a good rate for that, or I get interest or return. Now they started doing what? They start selling this also platform as white label to developers. This is great. The same even crowdfunding company, they took this crowdfunding one, and then they sold it to a bank, and the bank start using it as the platform itself as white label. So you should really also look at ways to utilize your platform. Maybe the idea which you are getting is working, it's fine, but you need to even look for better ways to utilize this platform. Maybe it's not getting 100% what your aspiration in the beginning. And the third, I think you should make sure that like you are self-sufficient for a time, because lots of the good ideas die because of the fund, because of not having enough to sustain for a while. The idea worth, I like this statement saying the idea can worth $1 million only if it's bring $1 million. It doesn't really worth $1 million because of its idea. If brought $1 million, then it's really worth $1 million. This is what. So they should make sure that they are self-sufficient. They are able to manage at least for a year till their products, and people start looking at at the outcome of the product and making sure that this product is really bringing a value to them. Should be okay now.
So Mohamed Roushdy, this is Munir.
Alan, hi, how are you?
I'm doing good. Thank you for the knowledge. Quick, just to highlight on Ihor point. When do you think the fintech will be not only for banking? Do you think the question is, do you think the opportunity is only for banking, or it's gonna be implemented on the government, on the service provider? So that will help maybe achieve one of the points like Ihor mentioned, like you come simplify the easiest way to do financial transactions. Thank you.
Yes. No, thank you for the question. It's very important. Thanks a lot. It's very good to meet me. When I said collaboration between the fintech and banks, I would say fintech and any company. You are absolutely right. When I talk about fintech for B2B, it can be with anybody. Like I agree with you. Fintech, it helps you to manage your money, your investment, whatever. Your money, use it everywhere you are using it. You are using it when you go to a shop. You are using it with a salat, with a telecom company. So I would say it is for everyone. It shouldn't be for banks only. A major thing for our MENA and for Africa mainly is the financial inclusion. And this should be banks only. No, it's everybody. It can use it. You know, your telecom operator, M-Base and so on. You can use it for all your transaction. It should be for everybody. It's not only for banks. Banks is a way to, if you look at the bank definition, is a place you deposit money and you can take finance. And the middle between the deposit rate and finance rate is what bank make. You know, the money they make. This is the main principle or of a bank. So in such a case, fintech is financial technology of any finance or any money dealing with your money in any organization, not only in banks. You know, it's very important. Now there is non-financial one, which is a data one, which one like to score you for anything in life. If I want to score you for because you want to get, as I said, anything from a telecom company or from whatever, not only from a bank, you can get scored as well. You know, maybe the merchant themselves, they will sell you something for credit for a while without even getting a bank involved at all. They can score you using your data. So I would say, no, it's not only banks, it's fintech dealing with any company, with any organization which deal with money or with which is the consumer is using or business is using.
Thank you, Mohamed. Thank you.
Thank you.
Okay.
Can I have one more question?
Yeah, feel free to ask.
Okay. The question is, are banks in many regions open to innovation? What do you mean? For example, in Ukraine, the biggest bank is Private Bank, and customers of this bank can use not only the direct banking services, but also can buy, for example, train tickets or the insurance or the taxi and some others. So is it possible, for example, for the banks and are banks open in the region to this kind of innovation?
Yeah. See, I mean, you know, I hope that I answered the question rightly. What's happening now? Banks should be, or financial transactions shouldn't be in a bank. It should be in Starbucks in Costa Coffee, where you can do insurance, you can do everything. You know, bank should be part of the customer journey, part of the customer lifestyle itself. So insurance should be there. I remember, I'll tell you one good case. In 2008, I was part of a very innovative bank. At this time, we launched one bank in Abu Dhabi, Al Hilal Bank, and then we came with a big body called what we call it at this time, the mall branch. While in the mall branch, we have insurance company, we have a airline company, we have a Starbucks. So the idea here that you go there and you have all your needs as a customer from a financial point of view should be done in one umbrella only. So like it's a one-stop shop at this time. But it doesn't mean you are the only provider doing it. And this is what we are saying. It becomes like a marketplace. And this marketplace, it's having insurance. Now, by the way, it's like Sterling in UK. It's a marketplace. They have their own product, but as well they are a marketplace. Now, I know that some banks digital here in UAE and other parts of the world, what they are trying is to do what? Is to have a marketplace. They have their own product, invite other people to sell their own product in the marketplace, and here is the bank, or here's you can call it whatever, can call it a marketplace for financial services or for customer needs and so on. Maybe in this marketplace, you might be able to buy clothes later on, maybe to be an e-commerce site as well. So it should be something really which is for all people needs, because it becomes online, because digital today. If today I'm in an app, what they call a super app, and I am buying, a finance, buying a car, whatever, I can even the same one, I can buy something else, insurance, or I can buy maybe e-commerce or whatever. So I think we are moving into super apps, which can have banks, can have insurance and so on. If I understand your question right.
Okay. Yeah, thank you for your questions and for this very interesting discussion. I guess we have hit the time limit. So thank you all for being here. And thank you very much, Mohamed, for very interesting insights, and Igor for very interesting questions.
Thanks a lot. And if anyone has a question, please, you can link LinkedIn or Fintech Bazaar and or send me the question which is there within answer. I'm more than welcome really to collaborate with and interact with all of you guys. And thanks a lot really for inviting me. It's an honor and a pleasure to be here today. And looking forward, inshallah, in the future for more interaction and collaboration. Thanks a lot.
Yeah, thank you very much.
Take care.
Okay, so everyone have a great day.
Thank you. Take care.
Goodbye.
You too.
Bye-bye.
Okay. Goodbye.